computer. Okie dokie, Christmas karaoke, everybody. Welcome to your Future Leaders today. We are on call 71, which in Spanish is 71. 71. My name is Daniel. Myself and Richard, we have Future Leaders today because we really believe in a term that we call sovereign finance. This ability for us to find more sovereignty in our life, whether it's through yourself, through money, through finance, whether it's through relationships. It's less beholden to something else, more empowerment of the self. We really think that crypto is a large part of the greatest transference of wealth we're ever going to see, or that we have ever seen. It's one of the greatest asset classes to come through and really level the playing field a little bit more. It gives the average person, the average person, more scope and ability to have a form of an income that's not necessarily tied to the amount they have to work. Something that wealthy people have known for a long time. It's about working smart and not hard. And quite often we come from backgrounds where we work hard. And so moving out of that head down to the grind space and more into crypto, you can have your money working for you much easier. And the opportunities to you with $10 and $100 is the same as someone that has 10,000 or $500,000. And we've never had that space in that time before, because that only exists in TradFi, traditional finance. So we made Future Leaders as a bit of a bridge, as a gap from not knowing much about crypto to being able to swim quite comfortably in the medium waters before you head out to the deep blue sea. You don't have to head out to it, but at least if you do, you got a little bit more knowledge. So we hope with these calls that we can help in the broadest of terms possible. Now, this is the first call for a while that we don't have anybody new. Wow. It's like our own little mini family, isn't it? Which means we can do whatever we want to do now. We don't have to behave. Yeah, we can talk about everything. So let's have a see where it goes. So because we haven't got any new people, no one has to be put on the spot to answer any questions or anything like that. However, what I will do is I'm just going to run through some of the questions that people have already put in, and then put it to you guys if there's anything else which people have got going on for them. So we had Andy specifically was asking about platforms to send GBP to stake. So this is around staking and earning, rather than sending through multiple platforms to get staking. Okay, so it's a little bit of a question about staking. Megan, who was joining, but she's not on the call, she's new, she wanted just generic information. Alan, beginning the conversation of crypto savvy informed accountants. We can definitely cover that. I wanted to pull into today's conversation a little bit around devices, maybe some stuff around some coins, Solana and Ethereum, do a bit of an upgrade in what we know about those things. Probably a little bit of a conversation about KYC and Binance, which kind of link back to accountants and things like that. And then I want to kind of run through our 9-part pathway that me and Richard have come up with, just to help people formally go through something that will run on these calls for the next 9 weeks. So before we do that, I know that Alan's washing up, Louise is eating, Trisha's over here, Neil's about to drive. But does anyone have something which they didn't have time to put down on the sheet that they would love to discuss? Anything that's been a burning thinking point at the back of their minds? I've not heard from Trisha in a while, or Neil, so I'm going to come to you in a minute, but Andy has her hand up. Tell us, my dear.
I noticed something about Coinbase a couple of weeks ago.
Go on.
The actual, you know, where it gives you the overall valuation at the top of the screen when you first go into the app, it tells you how much your crypto's valued at, your total, all your different coins. It's not, that value's wrong.
Okay.
So for example, say I've got $5,000 worth of crypto, the valuation's telling me I've got $6.5 grand.
Is that not because it's in dollars?
When I actually add up the totals individually, it's completely a different figure total.
What? So when you're looking at the, I'm just logging in now.
Yeah, it says portfolio balance at the top.
Mm-hmm.
So say it says 6,820 something pounds.
Let's say it says that.
But you know, so if it says that, and then when I go into my portfolio and I go across how much each of those is the values of, it's actually about 1,500 quid less. So I don't know where that discrepancy is. So that's been bugging me, whether you guys might know why that portfolio balance amount is so different to the, when you tot up all your individual different cryptos. Like, for example, I've got Bitcoin, I've got Kyber, I've got Ethereum, Tezos, Uniswap, Cardano, Compound, and so on. So
if you're happy to send me would you be happy to privately send me a screenshot?
Yeah, I can do that, yeah.
Send me that over and let me have a look, because I've just done it with mine now and it's pretty much bang on.
Yeah.
In fact,
my brother experienced something quite similar. It wasn't that he added them up and noticed that the total at the top was wrong, but he only had a little bit. I think he had a bit of Bitcoin, a bit of Ethereum, and then he sold it all. And when he got the money back into his account, like when he looked at the like withdrawal statement, he said it didn't match, because I said, oh, the fee's pretty high, and he even accounted for the fees, and I think he lost about 80 quid along the way, and he only had about 200, 300 in there. It wasn't a lot of money that he had in there, but as a percentage of the whole portfolio, he ended up losing quite a bit when he withdrew it. So I don't know if that's something similar, if that's kind of linked.
Well, send over. I have heard other things like this, but this comes down to, again, like, are you talking about Coinbase or Coinbase Pro?
Just Coinbase, man.
The one with the blue app, yeah? Because
Yeah.
I think that Coinbase does, I noticed this on crypto.com, that you can have $1,000 of something, let's say, doesn't matter what, $1,000 worth of Ethereum. And then when I sell Ethereum, I have 920. And the reason for that is because the Ethereum in the portfolio, the balance is, you know, it's whatever the rate is for Ethereum. But on crypto.com, when you sell an asset, you sell it for a lower rate. You can't choose. It's not like on Binance where you say, I want to sell it for this much, and then you have to wait. You literally are forced to sell for a lesser amount. So you can, you can have 200. Yeah, well, no, I'm speaking here specifically to Louise. I'd need to see yours to have a look, Andrea, to understand it more. So if you're going to send it to me, let me know what you're sending it on.
Okay.
Have you made any transactions, Andrea, recently?
No, not okay. For ages. I'm just reluctant to, after seeing, you know, this discrepancy. I'm like, how on earth can I have, you know, say $5,000, hypothetically $5,000, and then there's like 6,000 and odd it's showing as a portfolio balance when I've totted up. Even like when I first bought XRP and sold at a profit, even taking into the totals that I've actually put in and all that, none of the figures tally anywhere.
Okay.
I mean, the only real turn it off, turn it on. The only real answer to this fully is to sync your Coinbase to CoinTracker, because CoinTracker literally, it pulls all the information, but it displays it in a way that's visible. I find sites like crypto.com and Coinbase very limited in being able to extrapolate sense from any of the data. If you pull it into CoinTracker, it's all free of charge. Then you can literally see exactly where money's gone. So I can guarantee you that there's an old saying when we used to do, I ran a security and engineering company, that whatever is the likeliest fault is often the fault in the grand schemes of things. And a lot of the time it's a human observed fault, which means there is no fault. So I would imagine the Coinbase app is totally fine. And then the minute we look at your portfolio, something will be like, that's what it is. And you'll go, oh, of course. I've had people swear blind things are. I've seen all sorts of stuff over the years. So if you can send it, then at least we can get an answer to it, because it's probably okay. It'll just be something. It'll be something else.
At least it's
Do you have any?
Quite good at figuring these out, but you know, I've gone into everything. I've been in touch with Coinbase, and even they can't explain, you know, why the discrepancy.
Do you have any open orders?
Nope.
Okay. Well, if you send it across, let me have a look. I would also do what Richard said: log out, log in.
Yeah, I could add a quick Google of it, and that's what it's suggesting. But at least it's saying you've got more crypto than less crypto, which is all right.
Yeah, but it's like I keep thinking, oh, I'm doing really well, and then when I actually, because I've got a notebook here which shows, you know, everything that I buy, date times, how much crypto, how many coins and stuff like that, and everything. And then when I tot it all up, but I log out every time, so that's what I can't understand. It's still showing.
Send it over, Andy, because without seeing it, we're capped on how much support we can kind of give at this stage. But if you do send it, we'll have a look for sure. So I just want to come then. We're still on the opening up part. I just want us to come to Louise. If you had something in particular that's been on your mind, either from the last call or on this one, that you'd love to just bring into the mix that we can cover on the call, if there is anything. While you're eating.
Nothing in particular, to be honest. I've not really looked into the income streams yet, but that was something that I was really keen to learn. So the last call was really insightful, but I just need to have a look at that spreadsheet again and sort of consider what's the best way to earn a bit of interest. That's cool. The only other thing is I know you posted about Binance in the Telegram group earlier on this week. That's the exchange that I use at the moment. I used to use Coinbase when I first started these calls, and then I think there was a lot of noise around that, and so I ended up moving to Binance. And now, obviously, there's a lot going on there, and it's just kind of what exchanges you would recommend. I initially wanted to put it in Celsius where I could get a return as well, but obviously they're not accepting new UK citizens, so I'm considering moving it into a new exchange. So if we could discuss potential exchanges that you'd recommend, that'd be great.
Yeah, that is totally cool. We can do that. We'll cover all that when we're doing all the stuff on Binance. We just shrink the size of that down. Okay, cool. No worries. We'll make sure we cover that on there as well. Alan, you've already asked your question. Tricia, I've seen your question that's on the DM, so we can just generally just talk about moving things, but let me know if there's anything, your concern that you've got with Binance. Is this the same concern that Louise is alluding to there, just around KYC and things like that?
Yes, I just read on the chat this week the concerns about Binance, so I'm just also considering moving mine over someplace else.
Okay. Because
it's just I'm holding, maybe there's just a better option for me anyway.
Right. Well, we'll definitely. It's a really big point. Is this one as well? Neil, is there anything from yourself in particular you want to bring into the mix?
Yeah, the would just be about on-ramping, kind of what you guys are using for your on-ramping. I've checked out some of the Canadian, because for me, being in Canada, the Canadian some of the Canadian shops are the best, just because I can transfer in Canadian dollars, but they seem to be pretty, like, when you're buying, like, they say there's no fees, but then if you look at the market, like, there's a pretty big arbitrage in terms of what you're actually buying in at. And then you got the issue with Canadian dollars, because all these exchanges are in US dollars, and then you're buying in Canadian dollars, so then there's the exchange rate too. So just wondering kind of what you guys are using to on-ramp and to get in your fiat into the system, and then you could transfer the exchange after that.
Cool. We're happy to discuss that as well for on-ramping and the wider aspect of on-ramping as well. For those that don't know, on-ramping is bringing money into the system from fiat to crypto. Off-ramping is from crypto back into fiat. So we're all good there. Last one, Justin, anything for yourself, sir, since the last call, or something totally off topic you might want to bring? I know you go to other groups as well, so you might want to fire other things in. Oh, so you, there you go.
I've just been kind of looking into some of the things that were discussed on the last call, specifically. Zort caught my attention. It was something that I wanted to explore more. So that's kind of on my list of things to research. I did a cursory research, but want to do a deeper dive and probably just put something in based on your high review of it, and then continue the research project while contemplating future. So,
well, if you want, I've got yeah, you're just sticking your hands in. We're going to do next week. I'm going to meet up with someone that's in the group that's over here, so physically going to meet her, and we're just going to have a call just for high yield programs, which is Hyper, Daisy, Cash FX, and Zort, just to kind of bring them in. It's going to be a caveated call around risk and everything, but again, like we opened up last week's call, thinking that it's better to have some information that's tightly wrapped with enough context that people have got something. But there's a few of those things that we mentioned that we're going to talk about a little bit more in next week's call. So Zort will be in there, but we have a Zort group that I'm only inviting people into on one-on-one sorts of thing, like into the group. So if you want, I'll add you into that, because it literally contains all the chat histories on. It's a pretty short group, and if you are keen to get rocking and rolling, just all the info's in there. There's no referral links or anything like that. I just want to help people with it, because I do really believe in it. So if you wish to send me a DM, I'll add you in, and same for anyone else as well. It's there if people want to use it. But the other high yield programs require a little bit more explanation, because the risk is a little bit higher, whereas Zort definitely has a lot of things about it that make it safer. If that means nothing specifically to Neil and Alan, because I know you missed last week's call, it will make more sense when you catch it. Cool. All right, Justin. So let's jump in. So there's a I'm not missing anything, am I? So no, we're all good there. So what we're going to do is I'm going to go downstairs and get my water whilst I'm talking, but we're going to mainly focus to begin with on Binance, ramping, tracking, and accountancy. And just so that me and Richard could practice, Richard, do you want to see what part of the module some of this stuff falls under? Just so we can start to make sense of it. We've realized that whilst we don't mind answering some of the questions and stuff, it's useful for people to have a bit of a pathway when they're coming into crypto. So we have created like a 9-step process, or nine modules over 9 weeks, just so that we can record it, and anyone that's new can literally just follow through it and go through it. And then the calls can be a little bit more off topic, branching off, things like that. It also means that we really sat down and we were like, because Future Leaders isn't necessarily a crypto group. And we don't talk about trading analysis. We don't talk about the next big gems that are going to make you 100x. We're really focused on sovereign finance. Like, how do we help human beings have a better relationship with finance, and fundamentally have lives with more grace and more ease? And crypto is definitely a golden thread through that. But there's other things that branch off it. So we're going to start trying to relate it back to that a little bit, just to get our minds linking up what we're talking about with the pathway. And also just seeing as we go through it if there's things that we're missing. Like it's our best thinking, but until we rock and roll with it, we just don't know. So finance is about regulation, on-ramping is about getting money in, accountants is about tracking. Let us rock and roll into these. Okay. Binance, KYC. Trisha's concerned from what she's hearing whether she should move her money. Louise moved from Coinbase from hearing it might not be the best place for a move to Binance, and is now probably hearing more news and things. The only thing Binance is about really is KYC. That's the big thing. KYC is to know your customer. It's so that they know who you are, everything like that. It doesn't mean they're going to take that information, run to a government and hand it. It just means they have a log, a record to say this account is owned by Louise Wilson, who is a UK citizen. This is her passport, and it's there. Does it mean that at some point a government may request or subpoena that information? It could do. And my opinion is the way Binance is going, wanting to have more and more regulation, that it would hand over that information because it wants to play ball. But if you're not concerned about KYC, if you are taking some of your funds and you're putting it somewhere and you want to make more money with that funds, and you have an accountant and it's part of your wider business portfolio, then it's not, in my opinion, it's not a concern. Richard, would you agree with that? If you want to play the ball as it's meant to be played and you've got an account, would you have any concerns other than that at this stage, actual concerns with Binance?
The KYC thing and the regulation is the biggest thing, obviously. And yes, if you want to play it down the line and you're fairly new to crypto, then I don't really see a major problem with that in terms of the KYC. You might further down the line decide, as you learn more, that changes, and you want more privacy for whatever reason, that you decide. The only other thing with Binance is there are some slightly fishy things going on in the background. Trying to find
Just the Malta stuff.
No, there's a guy called Brian Brooks who was he was brought on about 3 months ago to from a really high powered sort of US banking job, which is the comptroller, which I can't explain what that is fully now, but it's to do with sort of regulation finances in the securities industry. But he's resigned from Binance 3 months into the job with no real explanation. So it's obviously got something to do with info that he's party to, or things that are going to start hitting Binance in terms of regulation. Would that make you change your mind in terms of the KYC? Probably not, but I think it seems like it's pretty significant to me, that in itself. Of course, it might just be you didn't really, you just moved on or whatever. But I think, given sort of where we are in the cycle of crypto at the moment, it seems like a very big appointment to sort of help Binance, and now we sort of backtracked because he's found some information out or whatever reason. But so it's something to be aware of, I think, anyway.
It could to put another slant on this, and we'll always just back different sides. There's no straight answer to this. Binance is getting a lot of heat because it operates in this really grey space. It considers itself decentralized, therefore it kind of doesn't meet any one jurisdiction. And then all these jurisdictions, like the UK at the minute, that's coming down hard, is saying, no, do you know what? We're not happy that we get it. You don't fit in this box. You don't fit in this box. But you can't just say, you can't just live in the grey area forever. I do also think it comes down to tax. Somebody wants to tax them more money. You're taking money from our citizens. All of these things. It's always about money, fundamental money and power. So I think that there could also be plays to influence Brian Brooks to say, look, we want you to leave, whether it's through peer pressure, whether it's through some other thing, because that amount of negative press, why would someone of such a high caliber leave a job that's all around, the comptroller is all about accounting and compliance. Why would they leave? So there's various reasons, but none of them are positive in that, guys. So this whole thing around KYC is good, but why Brian Brooks left, whether he didn't like what he saw, whether he got pushed out because of additional peer pressure, isn't generally good. But and there's some other noise around where Binance, the main big Binance company, not Binance US, is legally registered in Malta. So I'm going to, based on that, I'm just going to backpedal to the beginning where Louise is coming from, and where Trish might be coming from. Trish might be maybe more from a KYC point of view. And this is to remind everyone that crypto is the closest thing you've got to sovereign finance, meaning the opposite of sovereign finance is, let's just say, like less empowered finance. You put your money in a bank, you leave it, you can't really do much with it. The bank might give you a little bit. And so with sovereign finance comes this power and responsibility. And they say, not your keys, not your coins. So that means that if you're going to put your money on an exchange and that exchange goes down, that you lose your money. Obviously, you lose your assets there. So I've made this decision personally recently that there's enough noise within Binance that I haven't fully left it, but I've taken the lion's share of my funds and I've moved them. Now, that took me a couple of hours to do with what I was doing in the different accounts. It was a bit of a pain in the ass. But remember that we consider crypto a proof of work system, meaning the amount of work or uncomfortability or inconvenience you're willing to deal with is equal to the amount of rewards you're going to get. Celsius is great. You chuck your money in it, you leave it. It's the lowest amount of requirement for a decent amount of return. But if you want to get more than that and do more, you kind of have to put a bit more effort in, whether it's research or actually doing stuff. So I just want to remind everyone that whilst all this magic crypto internet money is brilliant and, you know, graphy, arrow, pointy, uppy, and everything's at the minute more rosy. I know we've just gone through a month of more difficult time. But never forget that if you don't have to keep your money on Binance, there are other exchanges. I recommend KuCoin, 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 which I've kind of used Binance and KuCoin interchangeably. And you can also do, am I right, Richard, FTX without KYC?
You can at the moment, yeah.
Yes. Yeah, that's Foxtrot, Tango, X-Ray, FTX. So both of these sites you can have non-KYC. Will it last forever? Don't know. Probably not. But by the time it doesn't, hopefully your technical ability will have risen to the point that you can hold your funds on a cold storage wallet. When it's on a cold storage wallet, no one's ever going to ask you for anything. But cold storage wallets require a little bit more care and attention, because if you lose your password to Binance, you can get back in. But if you lose your keys for your cold storage, you can't get back in. So remember, there's a trade-off when we move from exchanges to wallets. So the likelihood is, I don't think Binance will go anywhere. I think it will get really tight on its KYC. It will get really tight on its regulations, and it will carry on. However, there is a bit of noise, and that might be enough for you to go, do you know what? I'm just not even bothered for the noise. I'm just going to move. And I've given you two options where you can kind of move to. There are other exchanges. Nothing for security-wise really does beat cold storage, but not everyone's ready for cold storage. People are quite used to exchanges. In that case, move. I split a lot of my assets amongst different exchanges and different accounts, so that if Binance goes down, I've still got KuCoin, still got Kraken, still got FTX. Again, that takes more work, but I'm massively deleveraged against risk, because 4 different exchanges where I'm earning would need to go down for me to have a problem. But some people, I have one client I work with who his number one focus in crypto is simplicity, which is hard to keep that really, really simple. Simplicity, and this person wants to expand into high yield interest programs and earning money over here and earning money over here. And every one of these over here's requires another platform, another app, another everything. So I'm going to ask Tricia and I'm going to ask Louise, because you two ladies are the ones that brought up the conversation on Binance. Louise first, if that's okay. I'm just curious if does that comfortably give you a round enough bit of information, and does that actually answer your question so you can make a decision?
Yeah, definitely. I mean, I saw the article that you posted in the Telegram. It was the first I'd heard of like the Binance thing going on. And to be honest, the KYC isn't something that really bothers me. It wasn't that side of it. It was just, I know that there's different things coming in, like you can't withdraw to, you know, like direct bank transfer or onto a debit card and all these different like things that come out over a period of time. And it was like, it is the more to it. So it, the kind of, the Brian Brooks side of things is quite interesting, and kind of a couple of red flags there that obviously, you know, nobody knows why he's left, but there's, you know, you can make assumptions or wonder if there's more that we don't know. But the recommendations of the other exchanges that you're giving are great, because from my point of view now, it's just a case of, do I keep it there or do I move? And if so, where to move to? So to get some recommendations is brilliant. And I'll definitely have a look into KuCoin and FTX and see what's the best thing for me. I just don't want to constantly be moving, because I initially bought on Coinbase and then I moved to Binance maybe 3-4 months ago. It wasn't that long ago. And I don't want to be kind of every quarter moving, because I take the hit of fees when I have to withdraw it all to then put it in a new exchange.
Just a couple of points on, sorry, just a couple of points on that. If you're, in terms of safety, if you don't need to access your funds, you're not trading it, you're not selling it, like in terms of safety, Coinbase is up there in terms of safety. The issue with Coinbase that I personally have, I have 3 issues with it. 1, it has high fees, but if you're not trading, that's not a problem. 2, I don't think Coinbase represents the industry very well. It's very representative of traditional finance mentality, which is all about them. It doesn't, you know, it will go out and say, hey, what coins do you want us to bring on board? And people will say coin 1, 2, 3, and it'll bring on coin 4, 5, 6. It brings on coins that it's heavily invested in, which of course is a financial decision. If I invest in coin 5 and I bring coin 5 onto my platform, the value of coin 5 will go up. I make more money. There's nothing wrong with that. But in that instance, I'm listening to my financial decisions, not the market. So I don't like Coinbase morally and ethically on that side of things. And then when there's big runs up and big dumps, Coinbase goes down. And there's huge correlations between that, because they don't want mass exoduses, or I actually don't know what they want. That's my speculation. So, but if you're not looking to buy and sell when the markets go up and down, if you don't need to quickly log on to sell before something happens, if you're not trading, and if you want safety, Coinbase is at the top or in the top 3. So it's good to just understand really cleanly why that is, because you might easily choose, you know what, I am going to go back to Coinbase, because I can't say that KuCoin is better or safer or any of these things, but it sits there in the top pack of sites I'm comfortable with. And if your priority is to set and forget crypto, then you might want to move back to Coinbase, or look at investing into a wallet, into a cold storage wallet. Because if you're thinking, I'm going to hold these for 2, 3, 4, 5 years, it's definitely safer on a cold storage, but that will require a little bit more work to expand into that.
I do plan on holding, but rather than like dumping a load of money and then leaving it, it's more like dollar cost averaging that I'm doing. So like every month I'll be putting money into it. So I suppose it's any kind of fees of depositing and then buying coins.
Roughly, what's the amount you're spending per month though?
At the moment, probably only about £200.
Yeah, so fees, I wouldn't worry too much. I mean, I think your fees on Coinbase are about 1.5%, which is high. Standard industry is like 0.75. So you could say, oh, that's 100% more. But that's £1.50 out of every 100 quid. You know, it's, people get caught up on fees sometimes. If you're trading, fees are super important. If you're doing 1 or 2 buys a month, it's not the end of the world.
Yeah.
So just when you're thinking about that, if you are thinking of leaving Binance, just really consider what is it that's important to me, because quite often it can be going with the thing that, in my instance, I use Coinbase for a couple of things. Even though I don't like them, they make certain things much simpler, and I value that simplicity greater than how much I don't like them.
Yeah. Okay.
Cool.
Yeah.
Neil's, before I come to Trish, I'm going to assume Neil's comment is relevant to this bit right now. So Neil, do you want to throw in or ask something on this point?
Yeah, just you made a point about KuCoin not being KYC. When I set up my KuCoin account, they were asking like for driver license and photo and all these kind of things. So is there like, in these various exchanges, you can actually choose to do KYC or not KYC? So
all of them work the same way. All of them, if you are a next clicker, you will do KYC. All of them are designed in a manner that as soon as you've logged in, it's like, hey, what's your mobile number? Oh, cool. What country are you in? You can skip all of that. So I set up Binance accounts for people daily almost. There is no KYC on a Binance account. Sorry.
On a KuCoin.
Or Binance. The only sites I know of that are 100% you can't use this site if you don't give us your details is Celsius and crypto.com. You literally can't use them. If you try and click deposit, it will say, who are you? If you try and click buy crypto, it'll say, who are you? And I'm sure maybe things like Robinhood. I've never used Robinhood, but I would imagine that's similar.
So I can go back, because I wouldn't mind going back and setting up a new KuCoin without KYC, because the one I have right now is KYC.
Yeah, so you can keep that. I title mine. Mine will be like KuCoin 1, DH identified, KuCoin 2, DH identified, KuCoin 3 unverified. So I keep a nice clean log of any accounts, whether they've got KYC on them or not, just so I've got my own ability to be able to make sense of those things. So I hope that helps, ma'am. I'm just going to put your hand down. Tricia, does that answer your question around what to do with Binance? I'm going to assume yours was more from a KYC point of view.
Yes, I'm not a big fan of KYC. The guy that just spoke, sorry, I didn't get his name.
Neil.
Okay. So I don't know, I'm just going to ask a question to you, Dan, because I've used Bybit and my brother's still on Bybit, and he's a lot of money on Bybit. And he, both of us have had really, really, I mean, I know it's more for doing leveraging and stuff, right? But my brother hasn't even been doing a lot of leveraging with it at the moment because it just hasn't worked out for him to do that. But he's been actually it's been kind of sitting there, for a while, and we haven't ever had any problems with it and has no KYC. What is the negative of Bybit? I'm just curious what you see.
I don't know Bybit, but if Bybit is an exchange, all exchanges have the same negatives. Yeah. Okay. So those negatives are hack. The two biggest ones are hack. What word would I say here? Like collapse. They're companies. Yeah. So they go bust. Yes. So I'd want to understand, for example, in the UK, you might have all heard of Revolut as a bank. In the UK, Revolut and certain similar banks are actually not banks. They're called e-money exchanges, and they're 100% insured with every individual's money isolated. So if the 10 of us on this call all had an account with Revolut, our money is in 10 different accounts with insurance covering 100% of each of those pots. And then here is Revolut's money. So if Revolut goes bust, everybody gets 100% of their funds, okay? Which is actually safer than a bank. With an exchange, I don't know today how many exchanges keep their funds separate from main money accounts whether it's in cold storage, which means very secure, or in a hot wallet, which makes it susceptible for hacking, which is why on some of these exchanges, you'll see main account, trading account. So like KuCoin is an example. I can have $10,000 in my main account. And when I go to trade, it will say balance 0. I have to transfer, I have to actually physically click buttons and transfer it from my main account, transfer 5,000 to my trading account and trade. And the reason they do that is because this is cold storage, this is hot storage. So if there was a hack, I could lose everything here, but I won't lose this. So Bybit, I don't know anything about, but if I'd want to understand, if I was going to hold large sums of money on there, I'd want to understand. But I go back to what we were saying to Louise earlier. If as soon as you've got 5 figures in crypto, $10,000 or more, or a figure that's less than 5 figures, but that makes your bum squeak. You know, if all the money in the world to you is $2,000, then that's worth a lot. But if you've got 5 figures or more in general, I would heavily start to consider cold storage. And if you're not trading it, which means it's sat there, I would get it off an exchange. Because when you say like, what's the risk? I'd be like, well, it doesn't, whether you've got 1 risk or 10 risks, they still exist. So like, if you're not going to trade that money and it's going to sit there, get it off, put it in a cold storage, you're safe. What if you logged on one day and Bybit wasn't there?
Yeah.
That face, I saw that, even though I'm a long way from the screen, that's not a good day, yeah? And
No.
Unfortunately, and this is really, really bad, but unfortunately, the thing that KYC gives is regulation, yeah? Accountability. There are so many exchanges where we don't even know who owns them. And they offer all these incentives and easy ways to move your money and everything. I'm just, I only recommend FTX, KuCoin, and Binance.
Okay.
And I will include Coinbase in there because I'd say I trust them.
Well, it's good
Richard,
to know that
like,
you still recommend Binance.
Okay, would I still recommend it now? I would be on hold. I put Binance on the shelf to see what goes on. But in general, do I think it's going to go anywhere? I don't. But Richard made some really good points earlier. That there's a little bit of smoke. Is it false smoke to make us get scared of Binance? Is it genuine? I don't know. Like, oh my God, what's going on in the world? How much of that's signal? How much of it's noise? Crypto's got its own ecosystem as well. So like, I don't not recommend it, but I'm not running away from it all of a sudden.
Right, okay, that's good to know.
But Richard always has different points when it comes to like trusting of things. He sees things differently to me. So I'm curious, like, that's my round robin on things like Bybit, and I'm gonna have a quick look at it whilst you share your view as well. Just 1 second, I just want to get Ricardo's view on things.
Yeah, I mean, I think once you start using a few things, you'll make a decision about which ones to use or not. I mean, my favorite one is still KuCoin. It has been for a while for exactly that reason, because it's got levels of security in there and different sort of settings within the account to sort of separate it. But I think you kind of have to go back to the question, and we'll pimp the pathway that we're going to be doing from next week. Is the fact that really it's about deciding why you've got coins. I mean, the simplicity thing is definitely one thing, right? You know, you don't want to have too many accounts. You don't want to worry about things too much. But again, you know, that face you made, Trisha, where you say, if that's your one place you've got crypto and it goes down, what do you do? So I think it's a good habit to start thinking about different places and trying these things and moving them out and finding out what you like about them yourself and what you don't. But also, I think it's important that going back to the pathway, it's like, why have you got coins in one place or a number of places? Because, you know, as we said at the start, there's lots of different opportunities to make money. So the only reason I have money on an exchange is because it's a percentage that I've decided ahead of time, given my whole portfolio, what I might want to trade or or take profit from. Anything else it's not sat on an exchange, it's sat on cold storage or Celsius or crypto.com or wherever these places are, because they've decided, you know, what I'm going to do with it. So I think it's really good practice to think, why have I got stuff on exchanges, and what percentage would I actually need on there should I want to trade. If you don't want to trade and you feel uncomfortable about these things, then I think it's a really good thing to think about. Well, where would I put it, you know, and how would I spread risk for myself so I feel more comfortable?
Yeah, really, really important. And again, like I think we've got our pathway kind of kicking around here. Yeah, there's a whole point that's around, there we go, number 2, taking stock, which is like, why are you doing this and what do you need from things? Because when we start thinking about things like risk, strategy, and tax, they're completely different for every single person. So I think all of these sites offer a benefit, and there is a benefit to exchanges, because you don't have to look after your own keys. But there does come a point where this whole, as you're moving through pathways of sovereignty, your own pathways of sovereignty, as you take a step up each time, there does come a time when cold storage is the next conversation. And it's not to be scared about. It's just like anything. It's like, you've all driven cars probably, and there's a point when you get on the highway on your own for the first time, and I remember it's like, fuck, everything's driving fast as you're doing like 50, but before you know it, you've got your foot to the floor. So like, it's just comfortability. 50, let's just have a see. Bybit software company. I don't know why I think I'm in Canada. Go on, Tricia, what you got your hand up?
Yeah, I was just wondering. Okay, so I definitely probably should be in cold storage. And
You definitely, okay, yeah.
I should be in cold storage. At least some of my crypto should be in cold storage. So I have a question. Are there like classes that we can do or in that regard? And if I leave the rest of my money in, you know, in a trading account, then I can actually learn to do leveraging and stuff like that, because I need a little assistance in these areas.
We don't, let me just unshare this. We don't promote leverage trading at all. Okay. In fact, we don't even promote trading without leverage. And that's because neither of us are the right people to speak to about it.
Yeah.
I'm assuming I'm okay to speak for you here, Richard. We've had enough conversations on it. 90% of everybody who trades loses. The odds are just not in your favor. So it's like, can you make money off trading? Yeah, I know some really good traders, but 9 out of 10 people lose. So it's one of these things. It's like, wow, we don't want to promote something where statistically you've got a 10% chance of success. There's just so many other safer things you can do. I talked about Zort earlier. I mean, I'm averaging 10 to 20. If you watch the call from last week, it's a platform that trades for you using an AI bot, and I get 10 to 20% return a month. That's 120 to 240% a year. If I traded, could somebody get more? Of course they could, but I got shown a platform the other day that gives you 365% return a year. But then the amount of risk shot up, and I was like, what are we chasing? Go back to that module 2. Why are you here? And I want minimal risk, really. And crypto already has a lot of risk. But as soon as you're touching 100% return in a year, you've got to check yourself and look for greed and look for everything else. And so if all this platforms, sites, holdings, if your portfolio is doing good, just wait, because true wealth in its fullest form will come through patience, because it's always money transferring from the impatient hands to the patient. So just set things, give it time, keep checking on it, learn, grow, and we'll get there. So I can recommend you my best thinking for leverage trading, and it's using some of the stuff from the Bitcoin the Bitcoin family. I'm in some of their groups that are very active with some of their trading signals, and they look good, but I'm not going to go and do it.
Yeah, I'm not
If you want to learn,
doing that.
and if you want to learn about Zort, I'll
Yes.
if you send me a DM, I'll bring you into the group. Watch the call from last week, though. The call from last week just talks about passive income strategies.
Okay.
And watch that first before you start thinking of leverage trading, because it's not for everybody. It's not
Just
for
a
most
quick one. I think because a few people have sound like they're thinking about how much should I leave on exchanges and how much should I move elsewhere and how much should I put in cold storage. And you can go round and round and round with that. But I think the best thing to do is keep it super simple. And you'd say, well, start with 80% you would take offline, off exchanges. You'd put it into cold storage or into income bearing, passive income bearing strategies, and 20% keep that on the exchange, because then you'll start thinking differently about, if you're just a pure hodler or if you want money to earn for you differently. But that 80-20 split, I went round and round, and I just thought, what, that just works. So, you might want to just divide up the value of your portfolio and keep 20% on exchange and play around with trading on that or whatever it might be. It might be more, but at least start with that, because then you force yourself to start moving that 80% to somewhere else and start thinking laterally about, okay, what do I really want this to do? And then you'll be able to manage your risk and look at new platforms for yourself, and you can make your own decisions then.
Oh, okay, cool.
Thanks.
Okay, that's just it. Okay, cool. So Neil, did you want to ask or say something on that point?
Yeah, I was just, one point first, Trisha, I think it was Trisha was speaking, was there's a good mini course by Andreas Antonopoulos on just crypto security and crypto storage. He goes through and he step by step, has a kind of roadmap to cold storage and all that kind of stuff. So if you're kind of looking for something and some information on how to put your crypto into cold storage, like when you say trading, is this something, and I do agree, because like you said, 90% of traders, no different than equities and stuff in the normal markets, like lose, like when you, because, the way I look at it, like if you're saying like stuff like ADA or Solano or Matic, like if you're looking to hodl and actually hold long term, then you're just kind of buying in one time. But when you're calling trading, you're saying like you're actually buying and selling on a regular basis, like on a weekly or monthly basis. Because really, as you said, like if the ultimate goal here is sovereign finance, then really like cold storage is really the ultimate, as we talked before. So, I don't see how you keep money, even any, money on exchanges, other than you're going to actually trade actively, because really, or you're looking to buy on an active basis. But then, like Richard was saying, you move off, 8% on a regular basis, and then kind of, so I'm not just trying to kind of clarify when you say trading.
Yeah, no, that's cool. So you're either a trader or an investor. So in this instance, Louise, I'm using you as an example, is an investor. She wants to buy. She's not watching for price points and selling here and buying here. She's not spending time reading a chart to make a decision on a buy and a sell. She's choosing to buy, and she's dollar cost averaging. So she's adding to her position, therefore increasing how much she's holding. So she would be textbook investor. And every now and again, she might choose to sell because the market's higher or something. But am I right, Louise? You're not looking at charts all day thinking about buy and sell opportunities.
Yeah, not at all. Just same time every month, just buying.
Yeah, almost mechanical, so to speak.
Yeah.
So that's an investor for me. A trader is someone who is concerned about the price from a point of view of making a profit from it. So they're day trading, week trading, month trading. They're thinking about charts. They're looking for which charts have got the right setup. Various forms of things like that. Andy does some trading. She's been trading stocks for a while. She's bothered about the difference between a price. So that's how I would define the difference between a trader and an investor. To your question on, well, surely everyone should keep it in cold storage, then that is at its purest theoretical level, perfect sense. There's a guy that comes to the meetups every week called Nacho, who's out here, and he's a quite openly Bitcoin maxi all the way through. He's a techie, he's a coder. He's like, if it isn't on cold storage, you're just at risk. And he's right. But if the level of technical ability, we drew a triangle one week, and it's like the 3 parts of what's required to keep aware of, yeah. But the most important part of that triangle is technical ability. Your technical ability has to be equal or higher than what you need. So if the amount of technical ability to do cold storage is here, if your technical ability is here, you're a risk. I wouldn't advise someone to do cold storage if they're struggling with a simple password management system. Because if they set up cold storage and they make a mistake, they're screwed. So in that instance, for them, it's safer to use an exchange. And the problem we have is, especially for anyone that was born before 1990, and still a lot of people after that, technical ability is low. And you're moving from a world where we've been used to passwords, username, password, or I forgot my password, reset. And you're trying to teach people to move into a world where you're given a set of 24 words that you absolutely must not, you must write down correctly. And you can never lose it, because if you do lose it, you lose everything. That is a form of responsibility for a muscle we have never exercised. And so that's why steps of sovereignty, and the first few steps of sovereignty is to understand there's something greater than fiat. That in itself, to understand that fiat is just an IOU promissory note, to understand that it's just literally given out by a company, the Bank of England, the Fed, sold to a government, distributed to local banks, then marginalized, I can't remember the word, so that they're, for every 100% they lend out, they can lend out another 99%. That's like blows people's heads off. So it's like there's a few steps, and I'm making this up. Step 4 is, right, you're at a point now, what I said earlier, where you're like, okay, we need to talk about the white elephant in the room, and that is cold storage. And it's starting this process of a new level of responsibility, and that responsibility is management of a piece of information that is as precious as gold. What are you going to do with that? If you die, how does someone obtain that? Oh, I don't know. Well, you need to answer that question. And these are big questions that we don't just answer off the cuff. And for a lot of people, it's a first time for them having that much power. So I'm with you, Neil, in terms of that should be important, but it's not the first step, and sometimes it's simpler on an exchange. I feel like that was quite a big rant. Does that, I'm just gonna like unmute you or lower your hands. Does that give an answer? Does anyone disagree? Actually, it's not my view. Well, that was my view, of course. Richard, are you gonna give me a thumbs up, or like, am I halfway?
No, I agree. I think, sorry, Neil, do you want to speak now?
Go on, Neil.
Yeah, well, yeah, no, I was gonna say, no, it definitely makes 100% sense. You gotta take it, you gotta crawl before you run. You can't, just.
Is that me?
No, I think he's faded away there.
Okay, we'll mute him. If you do come back, Neil, you're welcome to share again. Go on, Richard, what were you going to say?
Well, I think if I understood what Neil was saying, he was saying that why would you, if it's about sovereign wealth and trying to protecting yourself and keeping yourself away from the system, why would you continue to trade? That's kind of the way I read the question. I think
also,
are you still talking? Can you hear?
Just keep going, Richard. It's cool.
And you talked about the difference between investors and investor and a trader there. But I think when you start, you kind of, and we went through this, Dan, at the same time, you buy a coin and you hold it. You just hold it and hold it and hold it, and you see it go up, you see it go down, and you are an investor at that point. But I think as you kind of move down the sovereign wealth finance pathway, you know, you might be not necessarily trading, but it is an option of something you can do with that 20% that might be sat actively doing something on an exchange or something. But you know, I think as an investor, what you want to be doing is rebalancing your portfolio. So as you see something, the mindset should be, in my opinion, you can buy and hold forever, but I think what you are at that point is really a saver. It's kind of not really any different. All you're doing is waiting for the value of something to go up. So you are investing, but you're so passive that you're almost just saving and waiting for it. You're only really an investor once you've sold it and you kind of reinvest it into something else, and you start balancing it. You start balancing your risk, or you take your profit, or you take your initial capital out. You know, so you know, you buy a coin at, I don't know, $1,000 of a coin, and it goes up 10x or 5x or 3x or whatever you decide. Then you take out your initial profit, and you can start. Now I can buy something else that I think might grow. And so you're an investor at that point, but you're not a trader, but you're still selling it at that point. And that would be, you know, at that point you would have decided, well, that's the 80% I'm going to hold, and that's the 20% that I'm going to go, okay, if that value goes up, I'll pull out my initial capital and find something else to reinvest in, or I'll take that capital and I'll reinvest it into, you know, a hype project or Celsius or whatever it might be. So I just wanted to make that point really, because I wasn't sure if that's what Neil meant, because I think, you know, as you start, you buy and hold, and as you learn more about crypto, then you might start deciding to do more with it. And I think that's just as important a pathway in terms of your own sovereign finance, wealth, independence, and all the rest of it. So, so there is a distance. Cool. I think we use if we're using an exchange, it's easy to start using the word trading, isn't it, and buying and selling, but it can still have an investment strategy around it.
Yeah,
agreed.
Sorry guys, I got cut off there, but yeah, that's exactly what I meant. Like for XRP is a perfect example. You know, I mean, if you bought XRP a couple of years ago and everyone was hot on XRP, then now, you know, so it's like, well, you know, and just like, you know, Guy from Coin Bureau, like he's always rebalancing everything. It's every quarter. He looks at his portfolio every 3 months and says, okay, where are we at? Am I going to kind of rebalance it more with this, with that? So I think that it's not really trading, but you're looking at, you know, actively, because you can't just say, you know, obviously you can say, okay, I'm just going to buy Bitcoin and keep 100%, you know, in there. And that's, you know, but if you're going to start getting into altcoins, then, you know, I think you have to really keep on the market, because really there's a lot happening and there's all these constant things going on. So I don't look at that as trading. I look at that as just more rebalancing, just like you're rebalancing a normal, you know, equities portfolio.
I think the difference there is you're going into that with a view to rebalance. The fact that mechanically you may buy and sell doesn't make you that wouldn't fit into trading. Like a trader knows they're a trader because it's like, I'm making money off making trades, whereas you're thinking, I'm in this for a long haul, but it makes perfect sense to be rebalancing. So I think they're definitely completely different things. And like anything, there's no red magic pill answer to all of this stuff. It's each person makes their own decision on what they are and what they want to call themselves and where they want to keep it. The most important thing is that we can hear different points of view and batter these things around and hopefully walk away with a more clearer picture anyway. So I appreciate your comments in there, Neil. Thank you very much. Thoughtful as ever. Thank you, darling. And did anyone else have hands up, or we're moving on to our next point?
Good to move on. Yeah.
We're good. So I want to quickly cover on-ramping, and I do want to get to accountants, and it's already 10 past the hour. Sometimes me and Richard said, you know what, actually, if we just do an hour's call, if there's not many things to talk about, and or certainly I always think that, and then it never seems to happen. So on-ramping. And Neil, can you just summarize? We're going to try and do quick fire here, but can you just summarize again what your question was, if you're able to take yourself off mute?
My question is, like, for example, I was tracking ADA, you know, I was tracking it at $1, and then, you know, in around $1, and then I was, you know, basic question is, you know, no matter if you're tracking, you're trying to buy something, or you're just trying to get into whatever you're trying to get into. The question is, you know, I got Canadian dollars in my bank account, my fiat bank account. I see an opportunity, you know, I want to buy more BTC. I want to buy more, you know, Ether, whatever it is. If I want to buy it quickly, you know, And I'm looking at these on-rampings because in Canada, there's only a certain amount of exchanges, a certain amount of actual on-ramps, and all of them are on Canadian dollars. All of them are, so that you got the conversion from Canadian dollars to US dollars. Then if you look at the actual VIG, you look at the actual arbitrage, it's like, whatever, 5 or 10% off the actual market. So every time I'm buying in, it's like I'm losing. Like, like you said, if you're in it for the long term, like, 5 or 10, those kind of fees kind of just, aren't really significant. But the question is, how are you guys on ramping? Like really a simple way, because countries, because if you have Canadian dollars or you have pounds, like just how are you on ramping in an efficient way? I know you could on ramp to USDT, but how are you doing that to really that you're not losing a lot on the on ramp in, so then you can actually put on the exchange, so then actually get a good buy-in price. Because if I'm trying to buy, that's effectively.
I understand the question, so we'll take it in turns to kind of answer. And I'm also curious to hear like what anyone else does as well. I feel I have a pretty slick on-ramping process now, and I don't think I lose out at all, really. That's my personal view of it. The main thing is the exchange of fiat, because most exchanges for buying and selling, most of them have got good rates. I don't put in that category Robinhood, Coinbase, Crypto.com. They sting you a little bit more with hidden fees. But sites like Binance and KuCoin, whatever the price is for USDT to ARDA, for example, is the price. And there probably won't even be much of an arbitrage difference between KuCoin and Binance. So then the only question becomes obtaining USDT at the best rate. That's the only question, because USDT is the golden coin that you can buy anything with. And if you want to convert USDT to USDC, it's 1-to-1 anyway. So for me, I use sites like TransferWise, Crypto, Revolut, Monzo. Monzo is a UK similar to Revolut. And these offer me a foreign exchange of currency at a very good price. Pretty much what we call interbank rate, which is the standard sort of rate. If I work with someone who can't buy dollars with a bank, then I would get them to on-ramp their local fiat currency. So for example, until Binance closed down GBP, I would send GBP from my bank straight onto Binance. And from there, I would buy USDT. Now, for every £1,000 that I did, I'm making this up, but let's say in the bank, £1,000 got me $1,300 or $1,350. On Binance, it would get me $1,300. So probably not even that much of a difference. My point is that to obtain USDT using the conversion of fiat to USDT on Binance was not that far off from what I would get if I did it over here and sent dollars. So once I realized that, I reached a point where I was like, oh, I don't care. So long as I'm doing a sizable chunk every time, I'm not bothered. I wouldn't be buying $50 here, $30 there. I move a wedge of fiat that I'm happy to be in crypto land. I might not spend it all today, but if I know that over the next month I'm going to spend $1,000, then I'll put $1,000 in. So that's my view on things. Because I'm never selling, I'm not looking to make an arbitrage opportunity or a trade. I'm buying and holding. So for me, if crypto moves 10% in a week, any coin can fluctuate 10% in a week. That means that unless I'm going to look at a chart at any given time, I could be buying at the bottom of a 10 or the top of a 10. So the fact that there's a 10% difference in that chart in a week means that I don't really care about losing out on 1 or 2% here or there, because I could forget to buy the next morning and save 6%. It's just, it moves so much that if I'm looking for long-term growth, I've given up thinking about short-term. So that's my opinion and view of on-ramping. And I have multiple on-ramps. And there's certain sites I just use for on-ramping. That's it. As soon as I've on-ramped into USDT, I send it to Binance. And I keep them nice and clean that way. And if someone closed down one, I've got 2 or 3 others. And I'm willing to accept a 3 to a 5% hit in fees and exchanges in order to get my USDT. I've just accepted that it can be as high as that, and that's part and parcel of crypto.
Well, that's my
Ricardo?
second question. So why?
Go on.
Oh, sorry.
Neil?
No, I'm saying that's my second question. So why, like, what's the benefit of that extra step? Like, why don't you just put the money, transfer the money directly into KuCoin or Binance? Why, you know, rather than buying USDT first? Like, what's the benefit of that
KYC.
first step? Okay, so it's KYC you're trying to.
So I have, you'll only ever on-ramp through KYC accounts, because no exchange is going to allow you to connect a bank without KYC. It's just legally not allowed. So
yeah, that's what I'm saying, because the ones in Canada, I have to, like, I can definitely transfer e-transfer. You know, in Canada, I can't. All the ones want KYC, so there's no way I can get around KYC of transferring into, for example, newbies, one of them here in Canada.
If you do P2P. So now that I live where I live, if I absolutely had to on-ramp, which I don't really do anymore, but if I did, I would do P2P. So I go to a meetup.
Okay.
I find like
someone, local Bitcoin or whatever it's called.
I wouldn't use local Bitcoin. I trust, you know, people that I know more. Like I know Trisha, yeah, who's on this call now. Trisha might come to me and go, "Hey Dan, I've got $1,000. Do you want to sell some Bitcoin?" And I might go, "Yeah, okay." We already have a relationship. You know, there's a level of trust there that's equal, and it's fine. Or we might go to the meetup and I'll say, "Does anybody know someone?" And someone say, "Fred, do you know him?" "Yeah, he's been here for 3 months." And I go and have a chat to Fred. And I'm okay with that. So there's definitely other ways to on-ramp without any KYC, but I keep them separate because it means I don't have to do loads of KYC everywhere. I'm not anti-KYC. It's just a bit of a pain in the ass. So having these sites here with KYC keeps it nice and simple and clean. And I know why I use them, but I don't keep money on there. So I hope that helps. But I'm curious if Richard has different views, and then Neil will come back to you to get your, if that answers your questions.
No, I fundamentally agree. I think, like you said, transfer-wise is relatively pretty easy in a number of ways that you explained. The only one I was just checking, I mean, if I wanted, because it sounded like you were, you know, you were tracking something, then you wanted to make a decision quickly based on your decisions, Neil. I mean, in my experience, sometimes they're not always quick. You know, you might be waiting, you know, it totally depends. You might be waiting a while for some of those things to work. So sometimes if I think I absolutely need to buy this now, I'll always use Swissborg and I'll always pay a bit more for it, but I've never known anything be as quick. Like literally I can send it from my bank and it's there. And I get an email within like 2 minutes. The cash, my GBP, my fiat money is in Swissborg, and I can then make a trade and I can move that out to the, you know, I can buy USDT or whatever I'm going to do, and move it to the exchange that I want to go and buy whatever it is I'm going to buy, and that can all be done in sort of 10 minutes, depending on what I buy. So it can move really, really quick. So it kind of depends again what you're trying to do. And again, sometimes you can beat yourself up about these percentages. I think Swissborg's like higher exchange rate. It's getting closer to 3%. But sometimes if it's easier and faster, and I'm not worrying about where anything's gone, that's what I'll do, because I've never experienced anything as fast as Swissborg. And you can be a Canadian citizen and use Swissborg as well. So might be an option there.
Can you? I didn't know that.
I'll just Google it. Yeah. So it says.
Oh, excellent. Yeah, Swissborg's super slip. But it's super slip. We are also European. So I've learned this, like someone did a bank transfer from an American bank to Coinbase the other day. He has to wait 6 days. 6 days, like we can't even comprehend that over here. So, and I also want to reiterate the difference between, if I know I'm going to buy something if I've got money sat in the bank, let's say you've got $5,000 sat in the bank that you're going to spend on crypto, and you're tracking Cardano, I would I'd move the money into the crypto world, because I used to be like you. I'd be like, all right, I want to buy something now. Okay, where is it? It's in my bank. Okay, send it over there. Oh, they flagged it. Oh, I've got to wait 2 days. And all of a sudden, oh, I've got to pay more fees. If you know you're going to spend it, just put it into the crypto land in advance. And just put enough in that covers you for the next handful of buys or trades or whatever you're doing, rather than needing to bring it from fiat every time. And that's the decision I made, that every month I was transferring 50% of my income into crypto. I didn't know what I was going to spend it on, but I looked back, this is my early days of crypto, and I was like, I'm ended up spending it anyway. So I just preempted it and was like, right, I'm just going to move it in a oneer, the cheapest way possible, which for me was Bitstamp. Bitstamp was 0% fees, sending it direct from my bank into Bitstamp, and I could choose euros, dollars, and pounds, and I could transfer all three. Cool. Who is the owner? Would love to talk. All right, Tricia said something. Okay, let's have a. So I want to really quickly just cover accounting. It's the only question Alan asked. Alan's waiting patiently in the background to understand this. From what we found, I mean, okay, Rich is taking a sec, but we've spent a lot of time looking at accountants. The short answer is most accountants are not crypto aware in most places. The bigger answer is it kind of doesn't matter. In the UK, crypto is treated as property. It's got the same rules as property to do with how quickly you sell it and everything. It's pretty much property, and it's just an asset. If you went to an accountant and you only had property, you had 100 properties, and you had no records, an accountant ain't going to help you. Accountants need data, and then they work out what to do. You need to have the data, which is how many properties you've got, how much did you buy them for, what money have you made on rental, how much have you spent on expenses, what's your mortgage that you're paying, all of these things. And you give them all that information, and then they can do your accountancy. It's the same with crypto. So if you can give an accountant the same things you'd give them with property, then they can help you. And any accountant can do that. But you first have to obtain all of that data. And that's where things like Coin Tracker comes in, to track the software, to track the coins, to show you what profit or loss you've made. If you just go to an accountant, even if the crypto, they're still going to need access to everything. And the sooner you start that project of creating the coin trackers, like we've done on the in some of the other groups that we share with you, Alan, that's the first step. And then you can go to an accountant. And that's very different to if you want a tax advisor. Accountants and tax advisors are different. And your question might have been about tax, or it might have been about filing your accounts. So I just bring that out. Anything for you to add, Flanagan?
Just from the point of view of if it's become if you've been in crypto long enough and it becomes a significant part of your wealth, then like Daniel said, I remember we talked about this really early on in his call a year ago and stuff. It's like there's a real difference between an accountant and a tax advisor, and you're going to get very different information. An accountant is basically going to take your numbers and he's going to say this is how much tax you're going to pay. And a tax advisor might be able to work with your personal circumstances or get more creative, where you would take some of the money that you've grown and you start thinking, do I need to have a company? Do I need to start thinking differently about my personal circumstances in whatever way that might be? There's lots of different ways, but a tax advisor is going to be much more creative and legal. There's grey lines all the way along this, but a tax advisor is going to be able to look at your personal circumstances, not just the numbers that you provide to them, and provide you with advice that is going to be more beneficial to you potentially in the long run. So you might not be there, but if, like I say, if crypto is now a significant part of your wealth, it's worth starting to think at that point. Doesn't mean you don't have to file the taxes, but it's worth just considering that. And if most of these people will speak to you and they'll say whether they want to work with you or not. So you can Google tax advisor, crypto, just pick up the phone and just speak to someone, and you'll soon know if they know as much as you need them to know at a certain point, based on where you are. So that's the way I did it. Just picked up the phone.
And if it's of any use, neither me nor Richard are financial advisors or tax advisors. Since I've come out here, I've spent that much time and money on obtaining my own tax advice and just having a broad scope of a lot of things. I do offer sessions. If that's of any use, Alan, I give you a very round, broad brush of things, look at stuff, and then at least point you in the right direction of the specific help. Because sometimes, even with us sharing what we've just shared here, it's like, okay, but what do I do? If you've never dealt with tax advisors before or accountants, if you never run a business, so much of this can be alien. So we don't ever really try and sell anything on any of these calls, but I do offer it because if someone in the community needs a helping hand, then we're there. But it is a paid service from myself on that side. So just send us a DM if you want, dude.
Okay, yeah, that's very useful. Thank you. I think, from my own point of view, I remember you mentioned a few weeks ago about perhaps being more tax efficient if you have a company rather than being personal. And while I've been self-employed since the early 2000s, I never needed an accountant. I never needed to put things in a company or anything like that. It was just a case of filing the tax return. So the idea of setting up a company is completely alien to me. And obviously the whole world of finance, let alone crypto, is largely alien to me. It's all new to me. So, and then I was thinking, obviously I've got to catch up on the passive streams of income call. But if I was to, obviously I've got some things that are earning a percentage like on Celsius and crypto.com. But if I was to find better ways of earning a little bit more passive income, then obviously tax is going to come into it. So some sound advice would be really valuable. Yeah, thank you.
Sure. Well, definitely catch the call next week and watch the one from last week, just so you can get a bit of an understanding of it. But it's the same for everybody. Like tax isn't a problem till it's a problem, but the poor mentality deals with tax when it's a problem. Wealth mentality deals with tax like well in advance, and you're thinking of tax in 2, 3, 4, 5 years.
Yeah,
so,
which is why I asked the question, really.
Yeah, no, that's good. No, it's really good. It really, really is. And like we just said, when you look at crypto one day and you're like, actually, I need to, when it's think of it like children, when it's a certain size, you're like, I need to manage it. I need to look after it. And it's a very good problem to have, but a problem is still a problem. So we'll definitely do that call next week. Give things a ponder. If you want me to have a chat with you, I can do. But same for everybody. Like at some point, thinking of these things and planning for these things is good. You don't have to start a company, but you do need a conversation with someone who's been through it, whether it's a tax accountant, tax advisor or not, just to kind of see what your options are.
Mm-hmm.
Cool. So
Thank
you for your question, Alan. So I'm not going to very, very, very quickly. Just want to show you guys what we are looking at for our pathway. Let me just get rid of that. So we've made a 9-part pathway that we really want to help people go through. So I would love, well, there's probably not enough time to really get any feedback on it. I think what we might do is probably make sense for us, Richard, to, if we tidy this up into a document, we could share it in the group and just get people's takes on it. But when we asked everyone for feedback over the last few weeks and months before we had the break, based on these calls now, what we're on 71st call, we really started to get an idea of a structure. So we decided that, first of all, the hardest thing people take is taking action. So we actually began with that, like actually get yourself maybe a new email, a new bank if you need it, and go and buy some crypto. Because I've met people that are still researching it for a year and haven't yet bought crypto. Then understand why you're doing it, understand the risks, understand how you might manage it. Because it's like driving a car. We want you to actually get in the car first, drive a little bit, And now we're going to maybe understand some more of the basics around it. So then we cover nothing about money necessarily, but around crypto. So we're looking at, what is blockchain, what is centralized, what's decentralized, why is crypto even a thing for the world, and then a little bit about wallets, the seeds, and the lingo and stuff like that. So this is like the basics within crypto. And these first three are our early module. And then in the middle section here, we've got like the next level up with crypto, opening up different exchanges, keeping it as simple as possible and safe enough. We've got different ways you can on-ramp money, loading up your exchange, like actually putting it onto your exchange. The conversation today with Neil about putting it on there. And then portfolio building. What is the structure you're going to do? How are you going to buy coins? Are you going to do what Louise is doing? Set day, set time every month and buy them? Or are you going to do what Neil's doing and track something and have a look? Then quite a big piece on financial re-education. This is difference between money and currency, understanding what fiat is, where the banking system's at, and then realizing that we all have a money blueprint. And that is what the old saying goes, it's easy to make money, but it's hard to keep it. So our money blueprint is where we leech money and we're not managing it in the same way. So we really want to help to re-educate people there to have a better understanding. Altcoins, low cap gems, and ICOs. This is the wild, wild west in crypto. Lots to be made within it, and everyone's always looking for which altcoins to buy. So there's a whole section in here really to just talk about that, to just talk about how do you identify them, what are the extra risks, how do you evaluate them, so that if you want to play in that world, you can do. And then as we move higher up in sovereignty, we get to this whole thing, which again we've brought up today, keeping coins, storage. How do you store them? Different places you can store them. We have got a section on how do you earn interest on them and staking, things like that. Just realized, Andy, you asked a question on staking. I'm sorry that wasn't fully covered. But if you listen to last week's call, we do cover that quite a bit. See if that answers your question. And then long-term storing, true sovereignty, which is what Neil was talking about earlier, like keeping it on that cold storage. The impending, at some point, winter. When it comes, why we exit, what is a crypto winter? How do you plan for exiting? Mindset, because until you've started to sell a lot of coins, this is an interesting one. And then practice, actually practice selling your coins, because it's not as easy as you think to get your money off an exchange into your bank. And finally, diversification, rebalancing. If you're not exiting fully, then you'll definitely be rebalancing. Why it's important. How do you create profits to create more passive income and cash flow? And then investing outside of crypto, metals and companies and other assets you can buy. So there's 3 sections to our 9-part pathway, kind of like beginner, intermediate, and advanced. Each section will be a different call. And you guys are the first people that we're sharing that with, really, to just begin the process of other people looking at it. So if you've seen anything on there that you think is missing or anything like that, I'd love any DMs. We'd love you to take part in it. It's free of charge for you guys to kind of come along, and we hope that this gives a nice framework for people to just move through all the different conversations that we talk about. So all that was useful. Just see there's a comment in there for cool, silence message. So let us quickly, for a couple of minutes, I want to take a couple of ahas or feedbacks or things that people are going to action away. Is there anyone in particular that definitely took something away from this call that were like, right, you know what, that's important to me now, I'm going to remember that, or I'm going to do it? Before we volunteered someone. Louise?
Yeah, I did. I've actually just got my calendar to put in at the weekend to spend some time to just have a look at different exchanges, but also like sit and think about my strategy, because even though I'm dollar cost averaging and I mainly want to hodl, like I said, I would like to earn some interest along the way. And last week's call was really kind of thought-provoking about where to put my money and how much I, like you say, would rather have less risk and a smaller return. but you know that it's better than it's getting at the moment if I'm not, you know, staking it at all or whatever. So I'd really like to look into Zort and things like that, and different kind of ways of getting some passive income from it. And like Richard said, the 80-20 ratio, and just kind of look at my portfolio, think about that whole why I got started in the first place, and kind of figure out what to do with it. Because I think that first step, like on your roadmap there, is just to buy crypto. And you know, I just thought, okay, I want to get into it, and I think, you know, the time's passing, and the best time to buy was, you know, years ago, and the next best time to buy is right now. So I just kind of bought some so that I had some, and then I've just kind of carried on buying and carried on coming on the calls, and the knowledge that I'm getting is great, but I need to kind of go away and apply what I'm learning into my portfolio, which is something that I've kind of failed to do so far. I'm learning a lot and it's great, and then I understand a lot more about different coins and stuff and what I can do in the crypto space, but then it's taking action and actually doing it, which is something I definitely need to work on. So that's something I'll be doing this weekend.
That's really, really cool. That's everybody goes through these things. My God, if me and Richard implemented everything we knew, we'd be definitely in different spaces. But at some point, you have to see it. Yeah. So I honor that, sister. I hear you. It's really.
You're only
really
ready
cool.
when you're ready as well. You know.
Yeah.
So, it's a great time to sort of look back, see how far you've come in terms of the growth of the portfolio, and think about what it can do and why you're doing it. That's so important.
That's why so many times, and Rich, I say it time and time again, he drilled it into me. What are we doing? Well, why are we doing this? Like, what would a guy say today on his call? If in doubt, zoom out. And then we kind of go, okay, this is why I'm here. And otherwise we lose sight, and crypto definitely you get caught in that current. Anybody know what Warren Buffett's #1 rule is of investing?
Is it when others are greedy be fearful, or when others are fearful be greedy?
Yeah, I'm actually thinking of really derogatory things like fuck everyone over, but that's not my my bias coming through. But he does have, I thought his #1 rule of investing is never lose money.
Oh yeah.
Yeah. I know a guy out here who he's not bothered about big opportunities. He's like, I just don't lose money. And if I'd never lost money for the last 10 years in my life, like, again, I'd be in a different space. So risk management is good, because in crypto, there's tons of opportunity. My God, it never ends. So cool. Anyone got one more share? I'm not going to pick on somebody. Is there anyone that wishes to share something that was useful for them? Tricia. Oh, hang on. We can't hear you. We can't hear you, but you're not muted. Nope.
Okay, let's try this.
Yeah.
Is that working?
Yeah, that's working.
I can't hear you.
Oh,
I'll just text
testing.
it.
Okay, we can hear you. No, speak.
I'll text it.
Okay, nice. She's gonna text it. All right, we'll wait for that. Let me click on everyone. Okay, well, I'll send it. Does anybody wish to add one whilst I'm waiting for the message? Otherwise, I have to kind of fill 20 seconds while she types.
I can add something.
Neil, go for it. Come on, fill the gap.
Yeah, well, something you just said. I think something, and through my investment career, especially in property, I think a lot of things, it comes down to capital preservation versus capital return, because at the end of the day, you got to make sure you get your money back first. It's not a matter of making 10x, 20x, but if you don't get your money back, then and I think if you look at the ultra wealthy, they're more focused on capital preservation. And I think that's kind of something to look at. And I think that's why some of these kind of passive income and some of these staking kind of opportunities come into play as well. Because if you're just always looking at the big bang and looking at the 10x, 100x return, then really, you could lose it all in the end. So, and I think then the caveat as well is the tax. And I think that's really what's upcoming is really governments are going to really go hard. I was listening to Michael Saylor talk about that today. You know, when they've kind of inflated everything, they've kind of, you know, printed all this money, like what are they gonna do next? They're gonna start going after taxes and property and stuff like that. So I think that really tax comes in a big factor as well. So like any investment, you got to really, you know, kind of look at the ratio between your growth and your return, and also capital preservation. So I think that that's key in this whole journey as well.
Yeah, really well said there, brother. And there's a certain point. There's one of our mentors shared 7 steps of wealth
ladder. Yeah, the ladder.
What was it? The wealth ladder. Yeah, and basically, like you reach a point at about 2/3, 3/4 of the way through where preservation becomes the key. Because once you realize you've got enough that can be life-changing for at least yourself, forget like generations comes after that, but there is a point within wealth where actually you're like, okay, if I just look after this, I'll be good. And we're never ever taught that at all. Doesn't, you know, unless you're born into a family that actually has any wealth, you put your head down, you work hard. So that's part of this thing that we're trying to just keep this narrative going in here, is like, why are you here? What are you doing? Have you got, how much do you even need? We all need different amounts. So I think you hit the nail on the head there, that there's that difference in capital growth and preservation, and when you need one and when you need the other. So thank you very much for sharing that. I've not had a message of Trisha just yet, but I'm going to have to round up Trisha. If you can hear, oh, just came through. Okay, cool. She got loads of points, but there's a private message there. So I'll make sure I action that, Trisha. Not a problem there as well. So in that case, then we are going to round it up. This was our 71st Future Leaders call. When we do this 9-part pathway, we're doing it because we specifically are trying to talk to people that have maybe just been in a little bit or are looking to come in. If you are, I'm going to be posting it on Facebook as well, and I rarely post anything on Facebook, if even log on to it. So I do formally ask you all, if you're aware of people that are interested, this would be a really good time for them to come on board. It won't start next week. Next week we'll have an unofficial call just on Zort and certain other things that I'm going to do live over here with someone. But it'll be the week after. So in 2 weeks from now, we're going to start the program. For at least the people in here, it's going to be free of charge. I think, for what me and Richard have said first time round, we're going to do that because we're kind of rolling with it. We're going to try and even make little handouts for people. Like we really want to help. We want to find a way to make it a bit more formalized for people. So if you've got people or friends that you think it would be useful for, where we ask you to share links to this group, to share links to what will be coming. We'll post something in, because it'd be really good if we could take a group of people through this and just help people create those first steps into crypto. And if you've been on the calls, we'd love you to still join. There's always golden nuggets throughout everything. And like we've said from the beginning, we don't want it to be about me and Richard sharing our thoughts on things. That's why I appreciate people like Neil being in here. That's a different perspective. You've got people like Andy, who's been in trading for years as well. And even people like Louise, who's new into it, still has her view that helps someone else who's even more newer than Louise is. So it's about everyone helping those that are around them and those that are still coming up from below them as well. And that way we have a ladder going all the way up to help people climb as high as they choose to and wish to climb. So if you can help us with that, you know, people, that would be lovely. And at the very least, we hope you gain tons from all of these calls. So thank you for joining us. Thank you for sharing. Thank you for asking questions and participating. We hope you have a really nice evening, day, night, whatever time it is. And we will see you in a couple of weeks. Bye-bye, everyone.
Thank you.